We all know them as unicorns, but now they are zombies. I'm looking into why so many startups are actually dying. But to really understand what's going on, we first need to look back at the big names that actually didn't make it in 2023. Hey there, my name is thecrwd. I love investing in startups, and today we're going to figure out why all these companies failed. 2023 was actually a big year of failures. Failures specifically in the world of startups and big iconic brands that we've always known. I first want to talk about WeWork, the co-working space that blew up about 5 to 6 years ago. They were valued in 2019 at $47 billion. Well, fast forward to 2023 and their stock plummeted by 98%. And in November of last year, the company actually filed for bankruptcy. The craziest news about WeWork is that Adam Neumann, the discarded founder who was kicked out of his own company, who made millions of dollars upon his exit, wants to come back and buy WeWork and resurrect it from the dead. The next startup I want to talk about is Zumi. They are a pizza automation company, and actually Jay-Z invested in them, and one of their founders was a former SpaceX employee who invented it, but they just couldn't get the automation to work. Millions and millions of investors' dollars were poured into this startup, but they were never able to get it up off the ground, and ultimately shut their doors in 2023. It also reminds me of a company in the world of equity crowdfunding. It's called Piestro. This was another automated pizza pod. They're trying to make pizza on the fly, and it had raised millions of dollars from everyday investors like you and me. Well, just a few weeks ago, they sent out a letter to their investors informing them that they were shutting down their doors and they weren't able to pull it off. The next company is Bird Scooters. Now, Bird Scooters was the fastest ever to get to the $1 billion valuation mark. Well, they filed for bankruptcy in December of 2023 as well. And another one, Olive AI. This is an AI healthcare company. Once valued at $4 billion during the pandemic, well, they shut their doors as well. So why are all of these startups failing? Well, there's a lot of reasons why they failed, and I'm going to break down a couple of them right now, but I think the biggest one, the one that I'm going to focus on here at the start, is they were in what I call the funny money era. This was an era where startups and founders had ideas and they could go to venture capital or hedge funds and they get millions of dollars thrown at them. They had crazy valuations on just an idea. They hadn't even done anything yet. And so it gave them this false sense that they were invincible and unable to fail. And they weren't really focused on profits. They were just focused on growth. And that was the deal. Get users, here's more money. One day you'll be profitable. That has all come to an end. Eventually, you have to actually make money. It's a business. Businesses have to make money. But for these founders, they didn't know any different. They had lived in an era where you can constantly go to VCs or hedge funds or big net worth angels to invest in you over and over and over again. But if you're not profitable, ultimately the spigot starts to run dry. So doing that process and going after it like those founders did, well, I call that insanity. And it had run out on them, and that's why they're failing. Another big reason is that money was so cheap and it was flowing everywhere. I mean, low interest rates, you could get tons of cash for almost no money when it comes to the rates. I think founders are taking advantage of that, but as rates grow, interest rates climb, variable rates happen. A lot of people are calling in debts, and these companies just don't have the money to be able to facilitate and pay off that debt. There's also the pandemic lifestyle. People bought and did things during that season that maybe they aren't doing anymore. The economy's turned down, it's gone slower. People are kind of pulling back on spending, which is hurting a lot of startups out there. And ultimately, the cost of living. There's a crisis right now. People can't afford homes, fuel's going up, food's going up. People are spending their money on necessities versus extras or bonuses in their life. And also, one of the big ones is the private equity world. The hedge funds and the VCs, they basically stopped. They just said, hey, look, we're not losing any more money. We're not investing, and these companies no longer had a lifeline, anything to keep them upright and keep them going. So what happens? They die. They have no source to keep the lights on down the line. Now, as I did my research on startups, I found something that was very interesting. It wasn't just the startup world. There was a culling across the business landscape and a large number of companies that declared bankruptcy in 2023. Some that I'm sure you know their names and have probably been to their stores. Bed Bath & Beyond, they went bankrupt, but they were bought by Overstock.com and resurrected back to life. Party City, they filed for bankruptcy. Now they were able to work things out with the court, knock some debt off the books, and keep some of their stores alive. Lordstown Motors, they filed for bankruptcy and they are all but dead. And the founder, Steve Burns, decided that he wants to buy back everything at a $10 million valuation and try and keep the business rolling. And Sears, a symbol of American consumerism for decades, gone. The biggest question in all of this is, are we done? Are there more failures coming? Well, I believe the answer is yes. There's more coming. I think we'll see more regional banks fail. I think startups will overextend themselves and they're stuck and they won't be able to get the cash and capital they need, and no one's going to be there to save them. I think the legacy businesses, like we talked about, the Bed Bath & Beyonds, the Sears, a number of them are going to continue to go out of business because somewhere along the line, they forgot to innovate and they got comfortable. But as we stare down a potential recession, the strong companies, they're going to get stronger. And just like in 2008, the Great Recession, some giant startups were born during those hard times and they are thriving and flourishing today. And I believe we're going to see the same thing happening in 2023, 2024, even 2025. But I would love to hear from you. What do you think is going to happen? Do you have some predictions on some big name startups that were valued at $1 billion one time that are going to crash and crumble? Do you think there's a legacy brand out there that's not going to make it? We would love to hear from you. Drop it in the comments and tell us which startups you think are not going to make it. Hey, if you're new to the world of startup investing, I would love to invite you to my newsletter where every single week I'm sharing education, but ultimately I'm sharing the deals that I like, that I'm looking at, that I'm watching on my watch list. The link is down in the description. Just click that link and you can come get access to the newsletter for free. All right, well, I hope you enjoyed this video. If you like this one, you're definitely gonna love this one, and you gotta check this one out right here.